Joining us right now to talk more about Tesla's quarter and Elon Musk is William Stein. He's Truist senior analyst. William, what do you think? That is a lot to digest and try and figure out what to make of it all.
Yeah, it was a bit of a chaotic report from my perspective. It didn't depart meaningfully from my financial expectations. A lot of the consensus estimates had not been updated. Ours were among the ones that were. So relative to our model, the quarter and the outlook weren't, really all that bad. The miss surprisingly came in energy production and storage and on operating expenses, which are being, inflated currently to address these AI opportunities. But some of the outlook commentary around operational objectives, mostly the ones you mentioned, but also the concept of bringing a new lower cost car to market sometime in the first half of this year is something they reiterated. That was a bit of a surprise, right? There's only about 10 weeks left. That gap, let's call it 10 weeks between discussing a car and actually selling it would be a first for the company. Normally they show a car and then maybe, 6 months later at the shortest, they'll be selling it. So that was a bit of a positive surprise as well. And some of the things you mentioned also.
So, William, they made $400 million, but they sold, if I got this right, $595 million worth of regulatory credits. The stock is called higher. Does anyone care? Are we supposed to look at this like, know how many years Amazon all they did was grow revenues and weren't really profitable? Is it the same kind of deal here? We're supposed to look at the future and not care about current quarter operating results? They didn't make any money, did they?
They did have positive operating and free cash flow in the quarter. I can't, really compare this to Amazon necessarily. I don't cover that stock.
What about the regulatory credits? Would they have made money if they hadn't sold the regulatory credits?
I haven't looked at that. I'd have to take another look to jog my memory, but that is, real revenue. One of the important and sort of remarkable transitions that's happened to Tesla over the last several years is that they have sort of breached through this level of profitability whereby they no longer need to access capital markets to continue to operate and grow. This happened, to the best of my recollection, 2 or 3 years ago. That was a significant change. And Musk has stated that he'll flex pricing in order to achieve volume growth, even taking it as low as break even on cash flow. They did better than that this quarter. They also built quite a bit of inventory in the quarter, and that influences that dynamic, right? In a quarter that's coming up where they don't have factory shutdowns and they're not likely to build quite as much inventory, I would expect to see profitability rebound at least somewhat.
William, the idea of Elon Musk kind of re-engaging in the day-to-day operations at Tesla, being more present there starting next month, how important is that?
I think that's perhaps the most important positive update. Again, from the negative side, we already addressed it. It's operating expenses affecting margins and the energy generation and storage revenue. But from a positive perspective, sort of, he gave a sense that things are normalizing, and the operational guidance that they've provided, not the financial targets which they essentially withdrew. They talked about, returning to revenue growth in 2025. They didn't reiterate that. In fact, they sort of withdrew that comment and they said, we'll readdress it next quarter, as you highlighted. Yeah. But some of the other operational updates were positives. The new car coming, as I mentioned, robo-taxi starting in June. FSD continued to be on track to deliver this unsupervised dynamic, something we've written quite a bit about. And we have some concerns and doubts about their ability to do that. But from the company, the plans are more or less on track. And I think that, and certainly led by Musk's more or less full-time return, were the key positives.
But you still have a hold on the stock.
Yeah, that's right. I mean, we're quite concerned about the AI projects and their ability to deliver what Musk has targeted. This again, I highlighted this 10-week window, which would be unprecedented for the company to actually be selling this thing, selling the new car in the first half. Also, FSD, we've reviewed this product many times. You don't need me to search on YouTube to find failures of that system, and yet it's marketed as something that essentially works today. So these are concerns. Optimus. I was going to say that the robotic system, this humanoid automaton called Optimus, is more than a twinkle in Musk's eye, but it's not like it's here and now, and yet a lot of the value of the stock is packed into that project.
It must be. Because it's almost an $800 billion company. If no Democrat or liberal ever buys another Tesla, even if will they come back with a lower price Tesla, or will only half the country? And Republicans weren't really big EV buyers in the first place. So where do they need to get back to where they were in terms of selling so many cars? It was amazing, because I've said it many, many times. That's all I see on the road out in a lot of parts of New Jersey are Teslas, just one after another. Are they going to return to that, William? Can that happen?
Well, I believe the Model Y is still the highest selling vehicle today. So, I mean, people are still buying them. I can't make the political commentary, but I think what will help is lower cost vehicles. I'm not sure that the one that's upcoming in the next 10 weeks, supposedly, because it's made on the same production line as the Model Y, I'm not quite sure they're going to be able to make that a compelling value relative, for example, to a Toyota today. They're not going to be able to achieve, price parity. So it's a challenge, and that's part of why, we don't have a more optimistic view on the stock.